Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, August the 21st. The year's 2019. Let's talk trading. Euro AUD day 13 of trading this pair, and it's FOMC day. And because it's FOMC day, it is really important. Actually, no more important than any other day, because it's always important to have our risk and money management in place. Because with our risk and money management in place, we know the worst thing that can happen to us on any particular trade is that we're only going to lose what we're willing to lose on that particular trade. Looking at the weekly, all gaps have filled, and right now we are in the lower wick zone of the previous week. And since it's NFP day, we can see the upper wick zone 163, is that 50? 59. So I would look to go long at 1.6359. And I would look to go short here at 16308. That's on the NFP if price is starting to move and move fast and move hard. That's where I'd look to jump in. So make a note. Looking at the buy zone, pivot just outside the short zone by just barely 2 pips. So really not much of a bias. But since we're playing the system here, we would have ignored that trigger. Here we would have taken a short and collected pips. As you can see here, price came back, moved back down, and then so right here should have taken profit. After that, all bets are on, meaning we can go short or long based on the signal. Here's another signal short, and here's a signal short, and there's one short, and you see what happened afterwards. So just once again, simple horizontal line trades, trading what you see as you see price cross one of these lines. Also, here's the weekly open right here, and just taking that weekly line cross, gave a few pips, gave a few pips, gave a few more pips. But remember, fellow traders, these videos are for educational purposes only. Your results may differ from mine. Trading, Forex trading, extremely risky. You can lose all your money. So seek your advice from an accredited financial professional rather than somebody off of YouTube, right? Or some trading forum. Okay. So that way, when they lose your money, you can feel that at least it was a professional that lost your money. Here we go. Looking at the day, only 2 pairs over 100 so far. Possibly everybody's waiting for the Fed announcement coming up in about 2 hours, a little over 2 hours. And so far for the day, an inside bar. But we know how infrequent these inside bars are on the Euro Aussie. So look for a breakout. And the past 3 days been relatively quiet. So once again, look for a breakout. Looking at the Einstein line, and it gave a short trigger, collect some pips, and here we're getting, looks like we got triggered again. Price action, bunch of 1 balls, but once again following the rule, 1 ball at the bottom, green at the line, pro trade at the line, red ball at the top, pro trade at the line, red at the line. Here we go, 2 ball at the bottom, pro trade at the line. Or we can take the other price action, knowing based on the average size of the hourly candle, average range, if price, when the candle opens, price is going to leave these lines, in this case both. Here we go again, price leaves both. Here we go, price only left one, but it just doesn't like to stay between the lines. But remember, because of the spread being usually 2 or more, rather than looking for 5 pips, you might take 2 or 3 before the market takes that opportunity for you to take profit away from you. Okay, blank chart, what do you see? Sometimes it's good when you're trading to start off looking at the pair you want to trade on, well, basically a blank chart, and just kind of take it in and look at what price is doing. You can always put more data on the chart by scrunching it up, and sometimes you get by looking further back, sometimes you'll see things that if you were zoomed in, you miss. And if you scrunch it all the way up, and then of course you can change it to weeks, and you get an interesting view of where price is in relation. And then if you go all the way out to the months, then you get an even more interesting view. But remember, as I change, you see price is the same on all these charts. It's just how much data, how compressed do you want the data? That's the question. How compressed do you want the data? Now, as you look at these charts, do you have a feel for where price is in the big picture, in the moment? Drop down to the hour. Is price telling you something? What do you see? What do you expect to happen? You see lower highs, you see a flat bottom, you see a couple of tests here. Do you expect price to go up or down from here? No predictions. We're looking at the H1. But because of the swap, once again, I've chose to be a red rat on this pair. So when you look at these H1 highest opens here, you see how nicely there's a payoff. Of course, some are bigger than others. So you don't need the 3-level ZZ indicator. You don't need even the holo highest open, lowest open indicator, because I know what to look for. I see this is a highest open up to this point. What's on the chart? So price didn't make a new high, drops down. Okay, and puts in a bottom. Now you start to see higher lows. And so now this is a highest open, but it's not quite that high. So maybe you pass on this trade. Then you see this nice zoom up here. See, it's in those wick zones, fails to make a new high. It's a new higher open, so you go short, and there you go. Is that hairy hindsight? No, it's not hairy hindsight, because we know what we're going to do ahead of time. It's just when it happens, it becomes a Larry live trade or Randy real-time trade, right? But FOMC is happening today. And even though this says NFP trades, you can also use it for FOMC days, or actually you can use it every day because it's really simple. What this indicator is doing, it's looking, in this case, to buy at 1370, which was the previous day's close. As you see, price is between the previous day's close and the low. So we're saying if price breaks out here or here. Now that, if you know, that's a wick zone trade. But you see, it's also below the mid. The indicator's set off just to work off of high, open, close, and low. But you can also use this as a long trigger if you wanted to. So basically we've got the 5 lines from the previous day: open, high, mid, low, and close. And prices, if it's in between 2 of them, we look for price to break out. Because on news days like FOMC or NFP, usually the breakouts are huge. And then you can also look here, you can do holo trades. Right there. You can do those. But in about 2 hours, when that news comes out, if price is sitting here, I'm looking to go long there and short there. And you can see here, we're in the green rat zone. And once again, showing the wick zone. Oh, and by the way, those of you with the THRO HL5, I think what happened is, and why the previous day shading wasn't worked, I checked that out before starting the video. I think somehow I may have done that on a different computer, and the code never came to this computer. I'm not 100% sure why it happened, but so I had to go in and insert some lines to make it so. I'll be putting out the updated HL5 sometime in the near future, so then you can get it and have shading. And I'm not sure, but I might even put the shading in on the wick zones and rat zones, give that option too, just to make it a little bit easier to use. Just depends if I want to dig into the code. It won't be that difficult. And let's see about TRO, HL5, and any of my other code. That's why it's so important you get the code from me, because one trader had a version that didn't even have the rat zone and wick zone code in there, those offsets. Now, I don't know where they got the code, or maybe they got the code from me, but they never got the updated code. You guys know where I post my code. That's where you go get the updates, unless I send you the updates when I send out the batches to the donationals. So please tell people to get their code directly from me or where I post it, because otherwise you can have buggy code or out-of-date code. And also, if you're having a problem with an indicator, please send me the chart so I can see what you see. Because if you go, well, it's not showing me the lines, or if it's not doing this, I have no clue what you're talking about. So just remember that. Fellow traders, if you haven't already subscribed, come down here and subscribe. And when you're trading today, remember, during FOMC, it's not what you trade, it's how you trade it. So go out there and drain the banks.